Good morning. Well, finally, the euro makes its move. Now, I've been calling for this for such a long time. You know, we have been saying the euro looks weak, it's double topped, it looked a sack, and it just wasn't going higher. Well, yesterday it played out, and today it's below its 200-day moving average at 118.53, and it's gone through 118.27, which was one of my targeted areas. So where are we going now? I've got another level coming in at 1786. That's down here, and then there's a bigger level coming in at 117.37. As you can see, that's down here. Okay, now that 1737 is a 38.2% fib retracement area. So obviously that's going to, one, see all shorts look to cover, and two, I think buyers will come in. Now, whether or not buyers are going to come in to push the euro to giddy heights, I don't see it, because even at 124, the euro is really underpinned. The trend in the euro is down. The long-term trend is down in the euro. We've seen, obviously, the market move up this year and last year, but that doesn't constitute what happened when the euro was at 160. So even though it's off the floor where it was back in March last year, it's still at 124 wasn't exactly high. We've been here many times. So I don't like the euro, as you know, and also you know that I've been hanging on to grim death to my little dollar index, which is what I've done. Now that dollar index is just bashing against the 200-day moving average, coming in at 92.61. We've been to 92.60, so that's obviously going to prove to be a bit of a level. Now, whether you see profit taking there or not, but I would like, well, wouldn't we all, but I would like this to get above this area here at 93.22 before I would add to my already long position. As you know, I've been mucking about with the dollar index for, it seems like forever, but it isn't. It's only been most of this year. So that's where we are in the dollar index. Now we want to see where the euro is against its other currencies. So we'll have a look at euro sterling. Now, funnily enough, euro sterling is beginning to look a bit big. You can see where the base is, you can see where we double bottomed down there, and if we can get above 86.57, then there's nothing really, I think, to hold it until 87.31.32. That's where your technical stuff comes into play, your 38.2 fib, your 55-day moving average, and that will be, I think, a big stumbling block for euro sterling, but not insurmountable. The market should at that point be a bit overbought, so corrections will be viable, but not cause the market to go down in any significant way. Personally, I don't know why euro sterling's bid. I have no idea. I don't think the euro's great at all, but that's just my opinion. So we look at now Euro Swiss. Now Euro Swiss has always been a bit of a dodgy one to trade after 2015. But at the end of the day, it is holding up in there. And that isn't euro strength, as you can see, against the dollar. I think it's just dollar strength outwitting these other currencies. So it would be like the Swissy getting weaker as opposed to the euro getting stronger, if you get my drift. But it's always good to take a look at these other markets against the major, because so often we don't do that, and that in itself can be a real problem, because if you don't know where it is against the other markets, you can't really, well, you can just trade outright euro. Well, we've got to look at the Dixie, so that, of course you can trade outright euro against the dollar, but it's always in your interests, I think, to look at it across the other major currencies. So EUROCAD, that's not looking particularly brilliant, but it is, again, as I said, it's the CAD weakness rather than euro strength. So we need to make a break really above, well, 150.23, 150.25. You've got the 21-day moving average coming in at 150.43. So that's your nearest, I think, moving average on the top side. Your 9-day is coming in at 148.81. We're trading at the minute 148.84. So that's a level to look out for. If we manage to get below there and stay below there, then looking at this, you've got that 147.95 area where the market will gravitate towards. Now, that could well produce a double base, same as what it's done in euro sterling. You know, the criteria is there if it goes lower. So just be careful if wanting to be long oh dear, of EuroCAD, because we're right at some good support now, and if it breaks, we're going to go quite a bit lower. So euro yen, again, we said the other day, euro yen, I'm not keen on this one, but it looked like it was going to break lower after we couldn't break above here. Now that was your 70% fib retracement, that come in at 130.59. We got to 130.65 and died. So there's no reason why we can't continue to go lower. If you look at the 55-day moving average, that's coming in at 127.71. There's still, I think, a way to go on this euro, on the euro yen. Watch the stochastics. I mean, at the moment they're pointing lower, understandably. The RSI is pointing lower as well, but we are not that far away from being oversold, and that can turn really easy. So you need to keep your eye on that one. If you're trading euro yen, I would suggest you don't trade euro yen, but if you are, that's the level that we look like we're going to go to. Now, if you can see this little tops here, that's coming in at 127.24. So there is a safety net. If we take out that 55-day moving average, we've got this little lot here that will or should support it. I think any move higher will be on a correctionary basis only, and that goes for most of the euro dollar cross rates and the euro dollar. If it's gonna move back higher, it's going to be on a correctionary basis only. But looking at that, I really can't see that there's much mileage on the top side. But if you do get a chance to, if it does flip up a little bit, you want to be short towards 118.53 and also 118.80. Okay, good luck. I will catch you all in a bit.